So perfect. Yeah. So welcome to another episode of our podcast, Investing in the USA. We have our very good friend here, Frank Herman, very successful investor. And please, Frank, just tell us, who you are, what you've been doing, all the good things that I know, but people want to hear too.
Yeah, absolutely. Thank you for allowing me to be a part of your podcast, and I'm honored to share this time with you today. So I'm Frank Herman. I was born and raised in San Jose, California, and cut my teeth in real estate about almost 20 years ago. So in 2005, I got my real estate license, and about 3 years ago, I moved my entire family from California to Mississippi. And people say, "Hey, why did you move to Mississippi from Silicon Valley?" And I said, "Well, I wanted a faster pace of living." And people chuckle because that's like an oxymoron.
Yeah.
But I saw the opportunity here in the South to invest and to create, legacy wealth and to create a better future for my family. And so I left California and moved here to Mississippi. And I think we showed up in Mississippi in 2021. And so that's kind of me in a nutshell. I know we're going to have some questions here today, but
Yeah, yeah. No,
but
I wanted to get you there because I know some of your story. I don't know everything, but I know some of your story. And your story when you came to Mississippi is really quite interesting. Uh, Tell us about that deal, like what happened with that deal, the big deal in Oxford, and how you found it, and that what happened, and like because that's always like amazing to me. And I definitely want to have my people see that story and know more about that story.
yeah. Well, I think when I first saw the deal, well, before we get to the deal,
Yeah.
um, I think I had a mirage of what investing looked like in multifamily, right? Like I had this picture of it being so glamorous. You're gonna buy these apartments and all these things. And so coming to Mississippi from California, I had an established team there for 18 years, contractors, and I was flipping houses, and I was doing really well in the real estate space. And then we got into the Airbnb arbitrage. And so coming to the South, I had no contacts, no contractors, no one to bounce ideas off. I just came here. It was more of a personal move to get focused with my core values and the alignment of what I want to do with my family. So I want to just kind of set the stage of where I was at when I found the deal. I had no relationships, and like I said, starting, calling brokers and things like that. But so I was in Oxford, Mississippi. The question was, tell us about this deal in Oxford. Well, I was looking in Oxford, Mississippi for just condos to possibly rent as like
Why Oxford, Mississippi? Because I mean, if anybody knows Oxford, Mississippi before we mentioned it, I'm
yeah.
I'm, I'm gonna be surprised.
The only thing I knew about Oxford, Mississippi was the movie The Blind Side with Sandra Bullock and Michael Orr, went to Ole Miss. That was the
Oh,
only
really?
thing
That's
I knew
based
about.
there. That's I didn't know that was
Yeah.
actually based there.
Yeah.
All right.
Yeah. So,
Great movie.
so Oxford from where I live is about 60 minutes. So it's a college town, SEC market, just very, very affluent properties and things like that. And so I was looking just because I had the experience in vacation rentals. We owned some vacation rentals in Hawaii at a time. Well, I was looking for vacation rentals for just game day Airbnbs for just my personal use. And so I was in that market just looking. I'd go there every so often and just look at what type of properties are available. And so that was kind of my thinking going to Oxford, right? Just it's a cool town. It has a lot of nice little shops. It's small, and so I wasn't looking for multifamily in that space. But because of my going back and forth, I knew that I liked that market. So fast forward, I'm looking at deals on LoopNet, right? I don't even think I had a CoStar account at the time.
Yeah.
And I'm just looking at LoopNet, and I'm looking at Mississippi properties. I'm looking at this anything that's available on LoopNet. And I see this property. It was 216 units in Oxford, Mississippi,
Hmm.
and on LoopNet it said $4 million. And so I
Right.
divided $4 million, divide that by 216,000 or 216 units. It was like something ridiculously cheap. I said, what the heck is this? And so I was on my couch. I was on LoopNet. Dude, I literally got up out of my chair and I drove to Oxford. Like, I'm like, 4 million bucks for this 216 A-class property. Really? Well, it was a teaser price.
Of course.
It was an auction that I think 10X was going to be running, in a month or two down the road, but it was a teaser price. They just wanted people to get out there. So I drove out there, I looked at it, and I said, "Oh my word, this is like something that I could see myself either taking down or partnering with somebody." But when I got there, it was not your traditional, let's keep it as a multifamily. There was 216 units there, and I think probably half of them, maybe 108, I don't remember all the numbers, but maybe 108 of them were detached properties, like
So like houses, like
houses,
actual
right?
houses.
And I'm like, what in the world? And so again, now I put my realtor hat back on. I've been in this space for 18 years in California, and I'm like, this is not going to be your traditional student housing. This right here is going to be a conversion, and we could potentially sell these off as individual houses or condos. And so I started videotaping the property, and I called one of our partners, or somebody that I knew that might be interested in it. And I'm like, this is not your traditional model. You have to listen to me on this. This, I think we should convert these to condos and sell them off individually. And so they didn't really understand the concept. And so the partner said, well, yeah, what does that look like? And I said, well, let me just explain to you what that looks like. And so I then found a team locally in Oxford, some brokers and attorneys and things like that to help us to see, could this actually happen, right? I knew I had the concept, but could it actually happen? And so I found,
And at this time, Frank, sorry to interrupt you, bro. At this time, how many months had you been in Mississippi?
probably less than a year, probably
Exactly.
6 months to a year,
Right. Right.
right?
So
I'm
I
gonna,
want people to picture that. Like, you just came to a city that you don't know anyone or anything about. You just kind of knew, and that's why you moved.
yeah,
Because you're like, like anybody else is gonna do that. Like, let's
yeah,
just move.
yeah. Who
Me
wants
and
to
my
move to
family.
Mississippi, right?
Yeah,
Uh,
let's just go
we-
to Mississippi. Yeah,
yeah,
because everybody's going to Mississippi, right?
absolutely. Everybody's migrating here.
And then you find that monster deal that as you describe it is just like a diamond in the rough, but not really in the rough at all. It's not like a real diamond.
It was one of those unicorn properties, Luis. It was, I don't know how to describe it, but it was like a one of a kind property that it didn't fit the mold for everybody. You had to think differently on this property. And by thinking differently and executing and the business plan going the way that we wanted it to, like we look like we're very smart people. It just so happened that it worked out the way we wanted it to. And so, yeah, I mean, so that's how we landed that property. I don't know if you want to ask me any other questions about
Yeah,
the
yeah. So I want people to picture, because maybe they don't really get what everything that we already know
yeah,
about the property. Because I know when I talk to people about multifamily, of course, everybody thinks about apartments. That's just normal, which is basically what you were looking for when you went
yeah,
there. But then you went and saw some of those units were like that, but
yeah,
some of those units were like houses, like I want people to imagine that, because I remember distinctly you showing us like, this is a property, and like it wasn't really a property, it was like a whole neighborhood, because you had like
absolutely.
streets and like going here and going up, going down, and like all these houses. It
Yeah,
wasn't really part of a multi-family deal as anybody would think,
no, yeah,
and it was so and also it wasn't like a dilapidated old, like really really like in the 60s or anything like that, or like with the squatters. How new was it?
I believe it was built in 2013.
Okay. Okay.
So it was an A-class property,
Right.
but it was being ran as like a D-class property. And so it actually went into foreclosure And so we actually had to compete for it, right? So the teaser price was $4 million,
Mhm.
but it ended up trading for north of 28 million, right? And
28 million.
so
So tell me also, like, because nobody is gonna have, I don't think, I mean, I don't know anybody that's gonna have like 28 million in their pockets,
yeah,
like right there and then. So
yeah,
what do you accomplish? Like, what do you have to do to actually get that 28 million? Because I know when you're auctioning or you're actually participating in an auction,
yeah,
it's not like, you can say, oh, I'll give you the check in a month.
yeah,
That doesn't
no,
work. You have to have
no,
the money, right?
yeah. So again, we did a syndication, so I don't want to obviously take all the credit or glory, but from my experience in this process, the day of auction, so every auction is going to be different, whether it's on 10X or different platforms, but sometimes they want to see some type of accreditation letter from the lender who's going to lend on it. Sometimes they want to see all cash. So every auction, every seller is going to be different. And so in this case, the requirement was you had to close, I think it was in like 60 days. Day one, if you get awarded the property in 24 hours or less, you have to put up, I think it was like, I, I'm going off memory. I think it was like 10% hard day one. Like day one, you're writing a check for over $2 million. You
Right.
better make sure you're buying this property, because that's the whole reason why 10X does that, is because they want to make sure that there's not going to be fallout. If there is, your EMD or your earnest money is at risk, right? So
Right.
that's the reason why a lot of these sellers use this platform, is because it goes hard day one. So make a long story short, um, we had about 60 days of due diligence before the auction date came. And so we were out there with our contractors, we're out there with our attorneys, we're out there with engineers, we're out there with everybody, because day one, when you get awarded the deal, you're going hard $2 million, right?
Mm.
And so we had a lot of upfront due diligence to see if what we wanted to accomplish could get accomplished. There was definitely some capex of work that needed to be done. I think we needed like $5 million in capex. So when you look at the totality of everything, it was probably north of $30 million. But going back to your question, how do you get this $30 million? Um, we had to go bridge, and so bridge is hard money. So it's a hard money lender. You're going to pay anywhere from 10 to 12% hard money. So on $30 million every year, that's $3 million just on interest, right? And so you have bridge lenders that will give you, I think, anywhere from, you know, 75 to 85% loan to cost. So all your capex budget plus, a majority of your total purchase price. So we had to go and raise that additional capital. We had to raise, I believe, like $10 million in private equity. And so these weren't family office. These were just individuals that we went to. I made phone calls and called some of my clients from California and high net worth individuals and said, "Hey, this is what we're offering. It's going to be a 2 to 3 year commitment. Are you interested? And here's what we're going to give you as a return." And
How many people do you know already that you thought of, maybe like, this guy, or that girl, or this family office, maybe they have money? How many people did you know already before making those calls?
I would say I probably had a good 20 or 30 people that
Okay.
I can call and see if they were interested, Um, I made phone calls. I called everybody that I knew that thought, hey, who could put up, 50 or $100,000 for the next 3 years and not be, burdened without having that in their bank account. And so, I just kept making phone calls and making phone calls. And we had, I think, about a good 45 days to raise that kind of money. And the partners that I partnered with, they raised a majority of that capital, but I did also. And so yeah, so it worked. It was a home run. And on that deal in particular, I took no acquisition fee on the front end. We didn't. None of us as owners took any acquisition fee. We rolled all of that into the deal. And so for the first 3 years, we didn't get paid until the deal finalized and sold.
That's really good to hear, because not many people are willing to do that. I mean, I understand why also, like, a lot of people need that money to fund the operations as well.
Yeah.
So why didn't you do it? Why, like, at that time, were you okay, with your operations, like, or were you like so committed that I'm like, you know what, I'm not gonna take a cent, I'm just gonna invest it all. So what was your thought process doing that?
Well, I would say for me personally, I wanted to show the investors that I called that I pretty much believe in this deal so much that I won't take any, I'll roll all my equity into the deal. And if this is not a success, I didn't make anything. But
Right.
if it is a success, I'll get paid later, but you come first, right?
Right.
So it was telling the story of I believe in this so much that I'm willing to forego any upfront um, compensation, right? And so when you believe in a product that much, it's either a great deal or it's a great deal, right? And what I've learned in these last couple of years is I think there's a lot of operators out there that do deals for acquisition fees
Right.
and the deal doesn't pencil, right? Like how do you survive for 3 years before you go full cycle without getting some type of compensation? So I think a lot of times people look at what they need rather than the overall project and investors and can I get my investors out of the deal and things like that. So we wanted to showcase that our investors came first and we're not going to take anything up front.
That's great to hear. That's great to hear. That really shows your commitment, to your investors and to the deal as well. We also kind of do the same. I feel like when I talk to my investors and I offer them deals,
Hmm.
I want to be invested in those deals.
Absolutely.
I'm not really broken in a deal. It's not like I'm an agent. I'm going to get a commission and that's it.
Yeah.
I don't work like that. For me, I have to be invested. Like, this is a deal that is so good that I want to, tell everybody about it,
Hmm.
because
Yeah.
I want to invest in that deal. So you should be there too. Like, I
Yeah.
definitely I want you to be there. It's not only for me. It's like, what, Frank, this is a deal that you have to invest,
Yeah.
you know,
Yeah.
that's how I feel about my deals. And that's how I feel about like you did with your deal as well,
That's right.
So
Yes, sir.
how is that deal going? It's like, is that still, because I'm sure it's still in the pipeline and you're still working it. Have you already started to sell off these condos or houses, or how far are you along?
I don't know if you're going to believe me if I tell you this, but it's truth. But I think we closed on that deal in 20. I think we closed on that deal in 2023 or 2022. I think 2022. And anyways, so we closed on the deal in April, and the following year, April 2023. Yeah, because I think we closed on 2022. April 2023, we paid all of our LPs back, all their capital. Okay. So we paid all of our limited partners back, but we still had to go through the process of selling all the other units and condos.
Yeah,
So what we did was us as GPs, we took no contribution, we took no draws until we sold every one of them, and we closed out 2023 with all the units being sold, 216 units.
that's insane.
So it
That's
was, yeah, it was a year
great.
and 6 months that it took us to sell 216 units.
That is amazing. That is amazing. Congratulations, man. That's
Yeah.
you see, that's why I wanted to bring you here,
So when it goes well, you're a hero, but if it doesn't go well, you're an idiot, So I thank
Yeah, no,
God.
but like I wanted to stress out, like, the things that you did that a lot of people are not doing, right? Like, you went to Mississippi. Who the hell goes to Mississippi, right? That's the first thing. But then not only that, you go out and like, what, let me look for a little property to convert into an Airbnb. You found this great property, but like now in hindsight, we know that it was a great property. But if it was me, I was going to say like, like who lives here? Like if
Yeah,
I get this, how do I even like start? You
yeah,
know? So I would have stopped myself because I didn't know anything about it. And that's
absolutely.
also the stressing out of the point of you don't really knowing the market all that well, but you
Yeah,
said, you know what, I'm gonna learn the market as I go,
that's
and you
right.
did that too. So
Yeah.
that for me, that's like really amazing, you know?
There's been a couple times in my life that I've been pretty bullish. Um, I don't know. It's one of those things like when you believe in something so much, you're willing to, you're willing to either, I don't want to say look like a fool, or you're willing to risk your name. But when you believe in something so much, you're willing to go the extra mile,
Yeah.
right?
Yeah.
Here's what I mean by that. Before I got into real estate, I was a truck driver. This was in 2000 and I don't know, I started truck driving when I was about 19 years old, and this was in California. And so I started truck driving, and then I got married in 2002 with my wife, and she worked at the fire department. And I read my first book called Rich Dad Poor Dad, Robert Kiyosaki. I don't if you haven't never read it, that's like the all-time book you have to read.
Mhm.
So up until that point, sadly to say, I have never read any book. I didn't read one book up until my 20s. And that was my very first time I ever read a book. It was like 2004-ish time frame. And I was truck driving. And at that time, my wife and I bought our first house in Silicon Valley. It was a 1,200 square foot house, interest only, 2004. We bought it for 444,000. It was on the east side of San Jose, 1,200 square feet, interest only. My payments were $2,700, and in about a year and a half, it went up about $200,000. So as I'm reading this book and I'm listening to Robert Kiyosaki, and I'm reading, and he's talking about liabilities and assets and real estate, I said, I think I'm going to do real estate. I think I want to do real estate. And at the time, we had no kids. And I was a heavy equipment operator. So I was making about $35 an hour at the time. And I was transporting equipment to the job site, and then I would operate it. And so I would do that. And I noticed that in the summer times, I would be working 14, 16-hour days. I'd be up at the yard at 4 o'clock in the morning and get home at 10, 11 o'clock at night. And we work seasonal because it's paving and asphalt. So we would go and do the road. So from November till about March, I collected unemployment. So I would go hang out with my friends and play dominoes and whatever. And but I would work really hard during this short duration of time. And so, make a long story short, when I was a younger kid, my dad would take me to baseball games. My dad would take me to football games. My dad got me involved in racing, and he was always there for me at those events. And I saw that if I was going to be this heavy equipment operator, make really good money, like I'm not going to be able to take time off, because that's the time that we need to get after it, right? In the summertime. And I knew then I would not be able to be that father like my dad was to me. And so I told my wife, I said, babe, I think I want to do real estate. Like, I'm good with people. We just bought a house. The market's gone up. I think I'm gonna do it. And she's like, all right. I said, but I got 3 more weeks before my state exam. I was taking these tests and got my principal's license and this, that, whatever. I said, but I got 3 weeks before my state exam. I'm working 14, 16 hours. I don't have time. I'm not going to read a book after I get home from work. And so she said, all right, well, quit your job. So I went to my employer's office on a Wednesday, and I said, this Friday is my last day. And he's like, what are you gonna do? I said, I'm gonna get into real estate. He says, well, I wish you the best. And that was in 2005. I quit my job. And then I'm like, okay, now how do you sell a house? Like, I don't know what to do. Like, I didn't even know how to turn on the computer, right? Like, at the time, I think we were still working with beepers and pagers. Like, I didn't have a cell phone. And so it was a huge learning curve. But my point in all this is that I believed in what I wanted to do, and I stepped out in faith. And 20 something years later, it paid off. But at the time, probably people thought I was foolish. But I believed in what I wanted to do. I think the drive was, I wanted to be the dad that my dad was to me, to my sons, even though I didn't have any at the time. But I wanted to be that. And I knew that in that position, I wasn't going to be able to be that person.
That it's great to hear. That is amazing to hear. And it's so funny how, like, I'm from Venezuela, and I also read Rich Dad Poor Dad, and it came to me as you're saying, like, before that, the only thing that I've read before that was like, comic books, and that was like the most like sophisticated thing that I read,
Yeah.
comic books, before I actually read Rich Dad Poor Dad. And
Yes.
then I used to say that I didn't like reading or books, but now I realized that it wasn't that I didn't like reading. I just didn't like what I was reading or what other people were telling me to read.
That's right.
I realized that this is what I wanted to do. I also
Mhm.
realized that real estate was something that I wanted to do as well. And
Yes.
I didn't know how, I didn't know anything, And
Mhm.
at the time, we went to Brazil to live because my wife works for an oil company and she got
Mm.
sent there. And I didn't know the language. I didn't know, anybody there. I didn't know anything. But I said, if I'm gonna start, this is gonna be my start because I like, what's that worst that can happen? Like in me making a fool of myself in front of people that I don't even know anyway. So it's fine. I
Yeah.
didn't even know the language. I didn't know anything. Right.
Yeah.
So I went there and like with open arms, that's how I relate to your story as well. Going to Mississippi, like you don't know anybody there. You don't know what's going to come, but you just say yes, and just go on faith. And that's
Yes.
also one thing that I want to stress out. Like how big do you have to have that faith in yourself and the people around you? Because I mean, like to take that big step, you have to have faith, right?
Yeah. Absolutely. And I'll talk a little bit about my faith, but I learned a lesson in 2017. And the lesson was a partner and I were looking at a property, and it was in Carmel, California. I don't know if you haven't heard it. It's a pretty nice, prestigious area. Pebble Beach, they have the golf tournaments there. And so, anyways, it was right around 2016, 2016-ish, 17. There was this property that we wanted to flip. And I remember I was in bed and I felt in my spirit that don't buy the deal. I felt it. It was one of those things that it's like, man, is that me or is that something else? Like, I don't know, right? So, anyways, I didn't listen to that. I didn't listen to the inner voice. I didn't listen to maybe what God was trying to tell me. And I pursued the deal. And the deal was supposed to be a 1-year project. It was supposed to be a $650,000 renovation budget. This is on a house, not an apartment. And it's supposed to be a profit of like 500,000. So I'm like, man, 500 grand in a year, man, that's pretty good on one deal. Like I've had many successes on other properties, like of course. Well, anyways, I didn't listen to what I felt like God was trying to tell me.
Yeah.
And I pursued it. And my business partner and I pursued it. And the 1-year deal turned into 2 years. The $650,000 renovation budget turned into $1 million. And the profit of 500,000 turned into a check of us having to write like a $400,000 check to get out of it.
Yeah.
Yeah. So what I'm trying to say is that my faith is intertwined with what I do. So I didn't just come to Mississippi because I'm a genius. I truly sought God for a year and a half to 2 years to say, Lord, is this a place that I can go to? Is this a place that I should be involved in? Is this going to be a better place for my family and my kids and for what you're trying to do in my life and how I want to impact the kingdom and my desires to support missionaries through the money that we make? Like, can I do that? Right. So I'm trying to lean on God because he sees my tomorrow. He sees what's ahead of me. I don't see that. And so because of that experience and not waiting and listening, it cost me some money. But I didn't fail. I learned something. So everything I do now, Luis, I partner with Christ. So my move, the deal I'm trying to buy, apartments, he is my partner in this transaction. He is my partner. So if I'm not going to listen to my partner, I'm not going to be a good business partner, if you would. And so my faith is heavily intertwined with the move or anything that I do.
I like that, and because I know you, and I knew that before you said it here. That's why I wanted to bring you here too, because I know about the wins, and I know about the big deals, and but I know also the struggle, and like everything that you've done before that too, because I've done it too. Like, nobody becomes a success overnight, because like, although people say that on social media and some people believe it, the people that actually do the work, they know the struggle. They know that you have to have that intuition that some people call intuition. I also call faith. I don't really call it intuition. It's just a matter of listening to it. And I love that Jesus or Christ is just your silent partner. Like a lot of people say they have, their silent partners, and this is actually
Right.
like a silent partner that
Absolutely.
talks to you. Not He doesn't talk to anybody else, or nobody else sees him, but he's
Yeah.
there.
Sure.
He's there. So that's
Absolutely.
really cool.
And you just talk about, successes and wins or even lessons learned. Um, everybody sees that we had success on this Oxford deal, right? Like, people are like, my goodness, like you killed it. You knocked it out of the park, right? And we did. That's just what the facts are. But people did not see me in 2008 when I was losing my house. And people did not see the things that I had to do to put food on the table. So in that 2008 to 2010 timeframe when the economy was crashing, I was losing my house. I had a newborn. They were going to turn off our PG&E. They, we're in a very hard time in our life. But what put food on the table, Luis, was me doing what's called BPOs, broker price opinions for residential houses. And I would try to do 5, 10 of those jokers a day because it was like $50 a pop. And that was the only way I could survive is by doing BPOs. And I had to know my numbers. I had to go look at the property. I had to look at the area. I had to look at as is value, look at the purchase price. What can we sell it for? So I'm doing all this stuff for the bank, trying to make $50 just to put food on the table. We short sold our home during that time. But what I'm trying to say is that time frame of doing BPOs in my most difficult time in my life made me a ninja at looking at deals that were single family. It made me a ninja because that was what put food on the table. So I had to be good at it. And then I got REO accounts. That's a real estate owned account with the banks. And I was their REO agent for the foreclosures. And so they would grade me based on what I told them. So I would say, okay, this property should sell for about 500,000. I only had a 3% margin plus or minus. So if I sold it for less than 485, my grade would go down. If I sold it for more than 515, my grade would go down. So I had to be sharp with my numbers. If not, I didn't get no more properties. So
Right.
my point is that, 17 years ago, in my most difficult time, prepared me for the Oxford deal because I
Right.
looked at the same numbers, underwrote them the same way, and at the end, when it became a success, people think you're a hero, and it's like, no, I've been doing this for quite some time, and this is what actually put food on the table. But people don't see that; they just say, "Oh man, he killed it."
Yeah. So
They don't
lucky.
see the
You're so
process,
lucky. You're so lucky. Right.
right? So I know that a lot of the success that has come now has been has has started 20 years ago
Yeah.
when I was in my darkest hours.
So let me ask you something else. In terms of the people who they want to become investors, but like passive investors. I mean, because they don't want to do what we have done, right?
Yeah,
What would you say to them is key before investing?
yeah, great question. I would say if you wanted to be an investor, I'm gonna put on not the hat of let me tell you what I think you should do. but it comes back to what's the best situation for you, right? So if somebody came to me and they said, Frank, I have $100,000 to invest. I'm going to ask you, do you want just mailbox money and passive income and hold this for 3 to 5 years and try to double the money? Do you want to own your own real estate? Like, what does that look like? What do you want? Because this money is going to be held up for 3 to 5 years, and you're going to get mailbox money and you're going to get part of the LP team. But if your true goal is to have a portfolio, then don't invest in this deal. Go buy a house and cash flow it. So I think it starts back with, what do you want as an individual, right? Not what's best for Frank, but what's best for you and your family. And so I kind of take that approach with a lot of my investors who call me. A lot of the investors that invest into our deals, they want passive income. They don't want to come out here to Mississippi and buy a single family home or create a portfolio. They just want to invest passively. They trust me, and so they invest into my deals. But going back to your question, the question I would have is, what's best for you?
I like that, because that's kind of what we do also. Like, we take the doctor approach. So many people tell you what you should do, but for me, that doesn't work. You have to ask first, right?
Yeah,
I mean, tell me what ails you. Like, tell me what the money's for. I mean, you want to invest. Yeah, you want to buy a house. But why do you want to buy a house? Because the goal is not really buying the house or investing. The goal is something else.
that's right.
Tell me about that, right?
Right. Yeah,
Tell me about that first, so I know what to tell you. Because
that's right.
maybe you're not really looking to cash out right now. So maybe
Yeah,
you can invest with your, retirement account.
that's right.
But if you need money right now, maybe you need something that is cash flowing right now, so you get money
That's
because
right.
you're on a fixed income or something.
Yeah,
So it depends on what you tell me.
that's
I'm
right.
not gonna tell you before you tell me something, right?
That's right.
At least I shouldn't.
Yeah.
You know.
And I learned this in cutting my teeth in residential real estate. I think in the very beginning of my career, I would always try to sell me. I would always say, oh, you know what? We sold this many houses, and this is why we're the best, and this is why you should work with us. And I remember it was a key moment of my real estate career that made people trust me. And it was a property I was selling for the bank. It got foreclosed on, and I was the agent on the bank's behalf. And it was in a very, very prestigious neighborhood. I'm talking, a 1,000 square foot house is going to go for 1.5 to $2 million. Like, it was that nice of a neighborhood. And this property was the cheapest house in that market. And at the time, I think we were selling it for like 400,000. So we had lines of people coming. Like, I would have in that 1,000 square foot house, I would have like 30, 40 people. Like, it was crazy. And I remember all these young professionals came in, and some of them had kids and some of them didn't. And I would look at them, and it was at this moment that I stopped trying to sell me, and I started to do what's right for them. And I would look at these couples that had a 1-year-old, a 2-year-old, and I say, honestly, I don't think this house is for you. Yes, you want to be in the school district, yeah, but do you see that we're on the side of a cliff? Like, where's your baby going to go play at? Like, what happens if they go in the backyard and they roll down the hill?
Mm.
Like, do you really feel like this is the best house for you, or are you just wanting to be in the neighborhood? But if you're looking for a home that you can have your kids go in the backyard and play, this is not the house for you. It was at that moment where people began to trust me. And it was at that moment where I said, you know what? It's not about trying to sell me. It's about what's best for you. And a lot of times you didn't make the sale, but it wasn't about trying to sell. It was about establishing relationships and building trust. And if we did transaction together or not, you still trusted me, and you're hopefully going to refer me to somebody because you trust me. And I take that same approach with the apartments that we buy. Anything that we're buying is this the best thing for you? Right? It's not about Frank. It's not about the acquisition fee. It's not about me trying to build my, but is this best for you? And if it is for you, then let's talk about the next steps on that deal.
Great. No, I love it. I love it. Also, so one last thing, last question. How do you see the market, in the near future, say in the next 6 months to a year, and maybe, from then on, like maybe 2 years or 5 years for that matter?
Yeah.
What's going on?
Yeah.
What's going to happen?
Um,
Your view.
so I'm gonna tell you what I believe that works for me, and I'm gonna tell you what I think about the market. There's an opportunity in every market. I don't care if interest rates are 6%, 7%. I've been paying interest rates at 12% for the last 2 decades. Like I'm not looking at interest rates to have me make a decision on the deal. I got to buy the property at the right price. And even if I have to pay a 6%, 7% interest rate, does it cash flow at the price that I'm going to offer? So if it doesn't cash flow at what you want, then I just got to get at a cheaper price. Eventually, interest rates might go down, but it's still going to cash flow. So it's not about the interest rate. It's about what am I paying for the property. But going back to your question, we're seeing a lot of properties now going to foreclosure. We're starting to see a lot of defaults. There's a property we recently made an offer on. I think the seller was going to probably lose about $20 million on it.
Oh man.
And every year they're losing about $2 to $3 million on negative NOI.
Hmm.
So I'm seeing that there's a lot of opportunities out there, and that was going to have to be a bridge product. So, you go make an offer on something that's 20, 30, $40 million, you're writing a check for $2, $3, $4 million a year on interest.
Right.
You see the opportunity because the opportunity on stabilized outweighs what the current situation is. But going back to your question, I think there's going to be a lot of opportunities for investors who buy for the right reasons, right? I think a lot of times we buy for the wrong reasons. We buy just to, oh, I have $1 billion assets under management. Well, the reality is you should probably have maybe 100 million, because the other hundreds of millions of dollars don't cash flow. And
Of course.
you're in a default position. So why are we trying to buy stuff just to put numbers on the scoreboard, when the reality is maybe we should just wait and only buy one asset that cash flows and is going to be profitable for your investors? So I'm just talking generally, but I think that this market, we're going to see a lot more opportunities. If interest rates go up or down, I still believe that there's opportunities out there. It's just you got to keep looking more and more and more, and network, and be in front of brokers, and be at NMHC conferences, and be at whatever conferences you're going to go to, and be what they say, hang around the hoop, figure out who's doing what deal's falling out of escrow, and that buyer couldn't perform, and now you're the second buyer or third buyer in line, and the sellers are like, I just want to get out of this deal, and now you get the better part of it because they're tired of trying to make it work and they just want to get out of it, right? So I think if you're patient and you wait and you have a process to bind for the right reasons, I think there's going to be a lot more success for that operator or individual. That's what I think regarding the market overall.
Perfect. Perfect. Well, I want to thank you, Frank, for being here. And I love the conversation that we had. I always enjoy, having time with you. And hopefully, we'll get to do something together.
Absolutely. And I appreciate your time today. And I hope this helps somebody else or blesses somebody. And I'm here to help however I can.
Perfect. Thank you so much, Frank.
All right.
See you
Thank you.
later.
All right. Bye-bye.